Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Shawn Cruz. He's a manager of trading services over at TD Ameritrade. With our midday update, we're going to take a look at the tech sector and how it could potentially be deceiving strength in cyclicals. Shawn, it's great to have you with us as always. Before we get into our first chart here, kind of steady flow this afternoon. Not really much going on besides, this morning.
Yeah, I think markets like what they heard from Chair Powell, who's just testifying to Congress. Basically said that the U.S. economy is in a good spot, and I think he was sufficiently dovish enough that the market kind of had the sense that if there is any further fallout or a pickup in the fallout from the coronavirus, that the Fed would be willing to step in and act. Whether or not the Fed, which when you think about QE, that's usually more of they were trying to solve a liquidity problem. I don't know how that really necessarily helps the whole issue of the coronavirus, but I think it just makes markets feel good that the Fed will step in and act as needed if there is a significant slowdown to growth.
All right, let's take a look at our first chart here, and this is tech deceiving the strength in cyclicals here. And it's really interesting that we mentioned tech because in between Powell's testimony, there was an announcement that the FTC is going to look at the big five and take a look at their acquisitions.
They are, and I think they actually had to come back out after that and make a statement that it was really going to be a very narrow focus. So it wasn't necessarily as much of a law enforcement policing action, but they are going to have a little bit more scrutiny on that sector. And I think there was a sense that the big five that was something that was going to come down the pipeline eventually. But I was looking at, we've heard a lot about the market making new all-time highs and strength in the market. And so if you assume that that is based off of some sort of an expectation for solid growth in 2020, then you would want to look at the cyclical stocks. And so you have materials, financials, industrials, consumer discretionary, communication services, and tech. And what you're seeing is financials and materials are actually negative on the year. So if you actually have a rally here that is based on the concept that we are going to see some positive growth, a little bit of a reflation in 2020, you would expect you want more breadth in the rally from all of these sectors. You certainly wouldn't want financials and materials to be negative. So it looks like tech's really been dragging this market higher. If you are going to look for an opportunity here where you think that growth is going to meaningfully improve in 2020, then maybe you can start looking in some of these sectors that have been lagging as far as what you're seeing from some of the other cyclicals.
All right, let's take a look at our next chart here as we're talking about financials and yield, virtually non-existent.
And this is something where you're actually seeing the probabilities for a rate cut increase, and I believe they're north of 80% for a cut by June now. So I think if you're looking at financials and you're asking yourself, what does that mean for financials? It doesn't bode well because you do want to see interest rates on the rise. That helps net interest margins, is generally beneficial for financials. And the only way I think you're going to get that rise in financials is if you do get a corresponding pickup in yield. The Fed broadcasting the market pricing in that the Fed's going to have to make a rate cut at some point this year sort of is the underlying assumption there is that there is going to be a little bit of a slowdown. So I think these interest rates are something to watch. And looking at that 1.5% rate, that's I think a key level to pay attention to. And if the Fed does come out and announce another rate cut, I would expect to see the 10-year move meaningfully below that 1.5% level.
All right, let's wrap it up here with Tesla because it's been some really interesting movement in this stock. You really have to have a stomach to handle some of those swings that we've had.
It is, and something the traders and something that I've been looking for in this whole rally was trying to see if Tesla's going to move to establish sort of a new price range that it trades between. That was something we saw from Tesla in 2019, where it had these pretty nice ranges where it would move, back and forth in those ranges. As it got to the top, you'd see sellers come in and push it lower. And when it got down to that floor, you'd see buyers come in and prop the stock price up. So I've been looking at volume, and I've been looking at this volume profile to see where we're actually getting volume building up, if there's some sort of a buildup in a certain price range. And right now, $700 to $800 looks like there's a little bit of a building up of volume here, and that can actually act as a stabilizing factor where you get back and forth trade, buyers and sellers coming in. That can maybe gives Tesla, I'd say, a new base somewhere in this mid 700s range that it could then make another leg higher off of, or investors might go out, get another quarter of earnings from Tesla and decide maybe they want to sell. But I think for the near term, we're seeing traders start to treat this $700 to $800 range as something that they expect to hold moving forward.
This is where this big chunk of aqua blue is.
That's what we look at, these blue areas here on the chart. That shows where there's actual trades going off at that price level. So you want to see this big steep peak you have right here in the middle. That shows that there is a lot of activity, volume, at these price levels. And when you see it build up at one spot, that means there's volume on the buying side and the selling side that are sort of offsetting each other, and that's what drives a little bit of a stable area for the stock to trade.
Yeah, because figuring out the fundamentals, that's very debatable, but price action obviously confirms that. Shawn, great to have you with us as always. Thanks so much for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.